just a lot. Launch Boom helped us and Scale Boom, obviously, but it was a little daunting and kind of isolated, especially during the pandemic. You're isolated already, and then I left my job where I was actually allowed to go into the office because it was a necessity, and then to be stuck in a little side office at my house. So. But now we actually have we have a corporate office, so we're moving up. Like a 1980s attorney's office or something, but it works.
Dude, we worked out of an abandoned hospital for like a year and a half until they kicked us out and tore down the hospital. It was like the only rent we could afford in Boulder, Colorado, but it was awesome.
Yeah.
So it's like, as an entrepreneur, you do what you got to do to make it work. So respect.
At the beginning, I had 6 40-foot containers, full of inventory. I made a little area for my desk. So I had a desk there while I'm shipping stuff out, and it was just cold and hot.
Right.
But it's all right. It was cheap, it helped the finances, and you can't just go from zero to luxury, and unless you're a software, and your evaluation is out of the world,
Yeah,
exactly.
Yeah. Cold and hot. Where are you calling from, Mark, or where was your office at?
It was in the Bay Area, East Bay. So there's a lot of differential in temperatures, and then the steel containers aren't insulated, so they just they're cold or hot. It's hard to get something perfect there. But
you're in the mecca for software too, Mark.
I know, I am. All my cousins are in software with all the different companies just crushing it. I'm like, oh man.
All right, we're going to continue this fantastic energy in a little bit here. I see a bunch of people rolling in, so I appreciate everyone joining us on today's session here with Mark, the founder of Tidy Board, and Sean is the CEO of Kick Further. And what is Kick Further? Well, that's what this is going to be about, actually. So hang tight. And if you guys are looking to post in the chats, make sure to switch it over to panelists and attendees. I think we can just dive right in, Sean.
All right, cool. Should I share my screen?
Yeah, please go ahead.
All right, very cool. All right, so thank you all for joining us. This is probably like I want to say third time we're doing this now with Launch Boom. It's been a good relationship, a good partnership. So want to keep this casual, guys. If you have questions, toss them in the chat, interrupt us. It's always a lot more fun when this is a little bit more dynamic. But what I'll go through here is we'll just talk about how Kick Further works and what we're looking for. So what we're talking about in this session is how do you scale? What is the funding that will help your product business scale after you've had a very successful crowdfunding campaign? So you get that initial product market fit, you're seeing that you're delivering value to the market, but now you need ongoing support to continue growing your product business. And we see a lot of, obviously, Launch Boom companies kind of right at that point. And so what we've seen at Kick Further, these are a few of the elements that we believe are the really important for entrepreneurs to pay attention to as they're preparing to scale. So what wait, that's not working for you guys, is it? So what we're looking at is you want to have strong supplier relationships. So you want to know that when you buy your inventory, obviously to the extent possible, we're talking about this in the middle of one of the biggest supply chain disruptions I've ever seen. But you want to have as strong supplier relationships as possible. The longer you have those relationships, the more likely it is they'll prioritize your production, the more likely it is that you're going to be able to get your stuff delivered on time and on quality. And what we found is that there is often problems. There's risk associated with changing your supplier. So if you're changing your supplier right as you're preparing to scale, just know that's a risky move. Efficient inventory management. So what we see is that businesses that are able to turn their inventory and have a good understanding of where and how their inventory is going to be distributed, and then not buying too much and paying overhead and storage fees and all the other maintenance costs of having inventory sitting on the sidelines. This also makes you a much more attractive acquisition target. So, the world of Thrasio and SellerX and all of those guys are taking a bit of a beating right now, but they'll be back, as the market returns, so will they. And so all of these things, it's like cyclical. So we're in a down cycle right now, but it'll all come back. The business model works, right? So the issue with efficient inventory management is they kind of say like more turns, more earns. It looks like a more capital efficient business, and it'll give you a higher acquisition price in the future if you're able to manage your inventory more efficiently. We know that there is variable product pricing across channels. So finding a funding solution that will be able to support your growth, whether you're selling your inventory through wholesale or whether you're selling your inventory through e-commerce, I think is critical. And what we've seen is that what you want to have is what we call the double. So if you're selling through wholesale, you want to have you want to be charging about 4x, right, what your cost is. So if your cost is $1, you want to be selling to the customer for about $4. And the reason for that is because what we're seeing in the market is a lot of these big retailers are paying attention to what's successful in the world of crowdfunding and then reaching out to those companies to stock them on their shelves. And if you don't have enough margin, if you don't have that double, you won't be able to open up those wholesale relationships. And those wholesale relationships are what will allow you to go from buying 1 container load to 10 container loads and then leveraging that increased quantity production to negotiate with your manufacturers and bring your price down. So that's like super common path we see. It's like you go out, get a big rewards crowdfunding campaign. Target says, that's sweet, I want to put it on our shelves, right? They give you a PO for 50 doors and you have to decide, can I take it? Can I make that all work? If you don't have the pricing, right, you don't have the margin, you won't be able to accept that PO and you're going to miss out on great growth opportunities. So pay attention to that early. Where you are now, definitely worthwhile. And then of course, the last piece is just access to capital. What we've seen, Phil Knight in Shoe Dog writes about this, where it's like, grow or die. And if you don't have access to capital, you're more likely to go into that second category, right? And so it's very much one of these things where it's like the better your access to capital and the more flexible solutions you have, the more likely it is that you'll be a persistent and resilient product business that is able to withstand, market shocks or whatever else, what will come. Because it's always, there's always a bit of uncertainty and we're aware of that. So funding solutions after crowdfunding, there are several on the market, right? So briefly, I'll talk about some of the others that are a little bit better known. So in the last decade, there's been a ton of merchant cash advance. Daily debit is what they're called today. So they give you a little bit of revenue today, and then they take cash out of every single transaction that comes back through your business. And that is nice because they work really fast, but can also be very, very expensive. And the way it's structured, if your business is growing, it's actually significantly more expensive because they always use historical sales numbers. And if you're growing, you end up paying back the debt faster, and it like drives up your APR very significantly. There's a lot of equity crowdfunding options today. There's WeFunder, Republic.co, others, and those groups are great. Again, you get some cash. The nice thing about equity is you don't have to pay it back. The downside of equity is because there are many more exit opportunities for product businesses, it's going to reduce your ultimate outcomes, right? So if you sell your business for $1 million and you own 100% of it, sweet, you're a millionaire. But if you only own 50% of your business, then you're only a 500,000-aire, right? So that's kind of the way equity works, is it just drives up the sale price at the end of the day for how much you need to sell your business for to create a comfortable, nest egg, let's say. And what you want to do is you want to have financing solutions that don't lock you in. So what we've seen is people that enter into financing agreements with factors that take a blanket lien across all assets, all revenue, blah, blah, blah. And then they get some interesting e-commerce opportunities, but the AR factor that has a lien won't release the lien. And now they can't access any kind of finance for their e-commerce channel, which is often significantly higher margin. So having a scalable, flexible funding solution that'll work with your product business as you continue to grow, I think is, really what we aimed to deliver at Kickfurther. And so, I think it's worth mentioning, I was a product entrepreneur myself, so we kind of understand the pain of the product entrepreneur in terms of how the cycles of manufacturing work. So the nice thing is that Kickfurther has been very much designed to fit the needs of a product entrepreneur, pretty much right where the folks in this call are. So we will fund your inventory at cost, up to 100% inventory cost of goods funded. You connect us with your manufacturer. We create what we call a consignment opportunity on the platform. The inventory gets funded through our marketplace solution. We pay your manufacturer directly. And then as your inventory is sold, it's placed on consignment. It's not technically your inventory, it's our user's inventory. And as you sell through the inventory, we see how much inventory has been sold, and we ACH debit and distribute the proceeds pro rata to your funders. And then you can continue to fund more and more inventory on the platform as you continue to scale up your business. I think that's a very high level, but Mark, would you say that's pretty consistent with your experience using Kickfurther?
Absolutely. It's you guys have been a great partner in scaling with us, getting us more funding so we're able to scale. We're in our third round of funding, and it's been the best solution that I've found to date.
Love to hear that. So at this point, I think what would make a lot of sense, I'll hand this back to Kevin and Mark, and you guys can talk a little bit about the specific Tidyboard case studies, and I'll just run the slides.
Thank you.
You're muted, Kevin.
Of course. Classic. So thank you for that, Sean. A lot of you might not know, but actually Tidyboard started working with LaunchBoom on a crowdfunding campaign first. And then after we launched the crowdfunding campaign, Mark actually found Kickfurther and introduced LaunchBoom to Kickfurther. And I just found that out in the beginning of this session. So and we thought Kickfurther was the perfect form of crowdfunding to a certain extent for companies that have just completed their reward-based crowdfunding campaign. And it's been an entire journey, and there's going to be a timeline here in the next slide. But yeah, I'll walk through it, and then I'll hand it over to you, Mark. But essentially, we launched the Kickstarter in June of 2020, and we had a massive success. We raised over $600,000 with Tidyboard and Mark and his team. And then Tidyboard, after fulfilling on the crowdfunding obligations, utilized Kickfurther to finance their first order of inventory, right? And then Mark, I'll let you take it from here because I think you know it best.
That's absolutely accurate. So, we very successful campaign on Kickstarter and Indiegogo with LaunchBoom, and then we only had a couple thousand units available, and we're like, well, how are we going to scale this business? And then I did some research, found Kickfurther, went through discussions with them, felt comfortable, took the leap of faith, and it was unbelievable. My co-founder and myself were pleasantly surprised how much we funded in 30 minutes. Our jaws dropped, and then we got very excited. We were able to place that PO and scale our business. And now we're on our third round of funding with Kickfurther and continue to scale our business. We had 100% growth year over year, and we're going to be about 150 to 200% this year is what we're projecting. Exciting times. And we're also using this knowledge to introduce more products to the market through LaunchBoom. We have one coming up with them shortly, and exciting times on how to scale the business, and having a partner that will scale it with you is just unbelievably valuable.
That's awesome, Mark. Hey, how have you been dealing with, have you had to deal with any of the supply chain disruptions that have kind of come across the market?
Well, fortunately, I have a great relationship with my manufacturer and supplier. So I've been fortunate. I did have issues with ocean freight, and that caused some serious issues and some nerve-wracking times, to say the least. We actually ran out of inventory and had to reduce our sales drastically in our marketing after 2 months with Scale Boom. They did an amazing job, and we blew through 95% of our inventory. So we just trickled it until we received our next round of inventory, which unfortunately took from placing our PO in July. Our first container landed at our fulfillment center November 17th.
Wow.
Right in time for the big push. And then we had, luckily, 4 more land in the next few weeks after that, and sold out of all of our inventory before Christmas. And then we placed another round of funding in January to receive more inventory, which is in stock now, and we've smoothed out our supply chain and our funding, and now can stay in stock hopefully for the rest of the year. That's our goal. So.
Nice. That's awesome.
Yeah, and to a certain extent, Mark and Tidy Board is sort of like the perfect case study here, right? We generated a ton of pre-orders on the crowdfunding side. We ship the product, or Mark and his team ships the product, and then Kickfurther provides financing. And then, in the very beginning, a very small amount of financing, right? It was like $30,000 or $40,000, and then it grew to hundreds of thousands of dollars in inventory financing per campaign that is run on Kickfurther to finance the larger orders as the business grew. So that's fantastic.
Yeah, it's really a nice little handshake solution. It's like get started, launch Boom, scale inventory through Kickfurther, scale distribution through Scale Boom, right? Like that's kind of this slide right here.
Exactly.
Actually, I have one really interesting question that just came through from Andrew Aidman. And so for everyone, please feel free to submit your questions in the Q&A section. And I'm just going to be going through them one at a time to ask your questions to Sean and Mark. Andrew Aidman asked, why does someone who raises $612,000 on Kickstarter need to raise more money to finance more inventory? That's a very good question. So I'll let you take that one, Mark.
Well, when you go from 600,000 to 1.4 million the next year, it's a pretty steep growth curve. You also have to realize there's a lot of costs with that initial campaign. Yes, we were profitable with our crowdfunding, which was amazing, but a lot of crowdfunding companies break even or lose money just to get their product out to the market and see if people are interested in their product. So at the end of the day, sure, we had roughly 2,000 units above our requirement for the crowdfunding. So yes, we did have units to sell and to start our business, but not to scale to that next level. We literally were selling 3,000 units a month when Launch Boom and Scale Boom took off. It was like zero, and it just went like fire. It was amazing. And that's where we needed additional capital to keep scaling the business. I mean, just to put this into perspective, our fourth quarter this year, we're anticipated to do over $3 million in sales in 4.5 to 5 weeks. It takes a lot of capital to fund those POs, and that's where Kickfurther is an amazing partner.
Awesome. And I'll also just add that there's like a lot of times when you do crowdfunding, one, it's pretty expensive, right? Like Kickstarter is like 9% or something right off the top. So Kickfurther operates on a subscription fee, which is not a percentage basis, and it ends up being significantly cheaper for the entrepreneurs over time than just funding everything through those rewards crowdfunding places, right? That ends up being really expensive, especially when you get to the inventory levels Mark is talking about. And the other thing is, I didn't hear this from Mark, but what we see is when you go through a rewards crowdfunding, a lot of that inventory is claimed, right? Mark said he had about 2,000 units left. If you get a big PO from Target and they want 100,000 units, there's like no path to using rewards crowdfunding to fulfill those POs. And so that's one of the areas that, we see the transition happen pretty frequently.
So
Absolutely.
actually that's a perfect transition to a question from Tom Ruddy. How does Kickfurther get paid? I may have missed that.
Oh yeah, we earn a subscription fee from the businesses that we work with. So our businesses pay us depending on their trailing 12 months revenue. We have like a whole schedule of discounts. So our businesses pay us every month or an annual contract to access the marketplace and our funders. And then on the other side, the funders pay Kickfurther an allocation fee to get access to the deal flow. So we are just like a marketplace matchmaker, and we earn a little bit of revenue from both sides of the marketplace to keep it fair.
Awesome. Awesome. I'm pretty sure those are all the slides that you have. Yes, Sean?
Yep. These are the end of the slides
so,
here.
Cool. Feel free to turn off your screen share, and then we can just continue to dive into the Q&A.
Perfect.
Cool. So another question is, where did you see the most success internationally? I guess that question is for you, Mark. Any best practices for country expansion?
Absolutely. The EU and UK were our biggest international markets so far, as well as Australia and Japan. We took on the world with our crowdfunding and went to everybody. We sold product in all 50 states and 50 countries in 30 days. So there is definitely a global market, but our biggest share is Canada, UK, EU, then Australia and Japan.
Nice. And Andrew was asking a follow-up question here. Thank you so much for your pointed questions, Andrew. Keep them coming. So he says that clarifies Kickfurther. Can you explain what ScaleBoom is a little bit more? How does that come in? So I can answer that question. So I'm actually I didn't properly introduce myself in the beginning of the call. I'm the product launch director here at LaunchBoom. So I help clients like Mark when he first signs on to launch a crowdfunding campaign to come up with a lot of the strategy and the game plan and timelines, et cetera, to get started with our crowdfunding division. And on the ScaleBoom side, it's essentially a follow-up to that. It is our e-commerce division, and we work with a lot of our crowdfunding clients when they have inventory to continue that momentum. And it's a variety of different ways that we work with them, but a lot of the time what we do is we run paid media. So we do Facebook and Instagram and Google and YouTube advertisements. And then we also have a studio in downtown San Diego where we create a lot of the assets, creatives, and you know, this term has been around for a while. Content is king, right? So we've doubled down on content and creatives, and that's why we have the studio in downtown San Diego where we create new creatives for our e-commerce and ScaleBoom clients to continue to maintain or even lower their customer acquisition cost and maintain their margins. So that's what ScaleBoom is and when that comes in. Next question here is what time frame makes sense to start reaching out to partners like Kickfurther? Right after the initial crowdfunding campaign, question mark, or what would be the best time?
Yeah, I always say that's like never, I mean, I would say deal with what you need to deal with at your business. If you don't have product market fit, if you're, you know, if you don't know whether you can sell your products, like figure that out first, right? That's the most important thing. But as soon as you get that indication, like, hey, people are buying what I'm selling, like you should start talking to people like Kickfurther, like others, like get a feeling, you know, like investors always talk about optionality, right? And every entrepreneur here is now an investor in their own company, right? And you should be looking to optimize your optionality, right? And that is how you're going to get, that's how you're going to be the most successful. So, and the best way to do that is to get ahead of it. So have the conversations, know what is available to you as an entrepreneur, and then pick the best solution when you get there. And I'm encouraging you to do that because Kickfurther is the best solution. So shop around and then come back to us.
I had a question for Mark. What were the other solutions that you had explored? Sean ran through a couple of the other solutions in the market. What were the other ones that you had explored? And from an entrepreneur standpoint, what were the pros and cons of the other ones? And were they even available for your business at that time?
Yes, as we grew, there was a lot more options for funding. A lot of them were more expensive and more difficult to access than Kickfurther, and didn't quite seem like a partnership. I was looking for a funding partnership, not just a one-off. Okay, here you go. Here's $200,000. Pay it back. Figure out your next step. So I'm more about strategic relationships, which, between LaunchBoom, ScaleBoom, and Kickfurther, it was amazing, so that's what made us decide to go with Kickfurther. I looked into selling a little bit of equity. We're trying to maintain as much equity as possible. We have not done the equity route yet. Hopefully we won't have to. Just depends on how fast we scale and how big we get and how much Kickfurther is willing to fund us. No. But no, it's after doing a lot of research, it just made the most sense.
Gotcha. And what are the main sales channels now for Tidyboard? Obviously, there's the e-commerce side that we discussed. What are the other sales channels? And what was that transition like as an entrepreneur, Mark, from having one successful crowdfunding campaign to, a successful e-commerce business and now expanding to multiple channels?
So this is where ScaleBoom helped us a lot. And they did a great job building out our Shopify store, our e-commerce site. And then we did go on Amazon for a little while, but unfortunately, once again, we sold out.
Nice.
We're back on Amazon now, and we have a lot of inventory coming, and smoothing out the supply chains, the ocean freight, and just figuring out, like, I need to order 120 days instead of 60 days ahead, like it used to be, and getting ahead of everything. And that's where ScaleBoom and Kickfurther really came in as a very, very strategic partnership. And we are now launching in Japan, Australia, EU, and UK. We're in that process right now, and we're excited. We're definitely excited.
That's interesting. So are you doing that through e-commerce or through a distributor or like a local partner?
So the second largest outside of the US and Canada, the UK is the third largest marketplace for Amazon, and then the EU. So we're going to go with Amazon over there just because of, unfortunately, international shipping and taxes and VATs are pretty complicated in Amazon. After going through it, they're pretty complicated, and Amazon takes a lot of that burden off of us. So that was the decision over there. For right now, we might switch, or we might do both in the future. But to get our market share and our name out there a little bit more, we're going to go through Amazon.
Gotcha.
And unfortunately, we've had a lot of people on the wholesale side approach us, but we just can't scale fast enough yet. It's one step at a time, and 100% growth after a crowdfunding during a pandemic is kind of head spinning. And then now we're about to do 150 to 200% growth this year. And then next year we see substantial growth with our international marketplace, and it's going to be hopefully an exciting year.
That's incredible. Well, I actually just saw quite a few people just join us here. So welcome everyone that just joined. If you have any questions, like if you missed the first 20, 30 minutes of the presentation and you need some additional context, don't hesitate to drop them in the Q&A section here. I'm just going down a list of questions for both Sean, who's the CEO of Kickfurther, a inventory crowdfunding platform. Can I call it that, Sean?
So we've rebranded. We're now an inventory funding marketplace.
Funding marketplace.
Yeah.
Gotcha. Fantastic. And then Mark is the founder and CEO of Tidyboard, which is a client of LaunchBoom's and one of the companies on the platform of Kickfurther. So Moving on to the next question here. Is there a minimum number of SKUs you think is needed in order to be successful in e-commerce? That's a really good question.
That is a great question. I mean, I started out with 2 SKUs and did fine. So it can be done. It can be done with very few SKUs, and then as you get your feet underneath you and figure out what your customers want, you can start adding more SKUs, which we have. And now we're about up to eight SKUs. But I wouldn't be scared of having 1 or 2 SKUs and going for it. It's all about the demand.
Yeah, I would actually encourage to try to find that one SKU, right? Like, what is that anchor SKU that people really want, you know? And then when you find that one, it's easy to be like, oh, here's little incremental value I can create for those same customers and upsell them into it, right? But if you don't have that one anchor of like what you do and why people buy with you, like, I don't know. That's what we've seen time and time again is entrepreneurs. They're like, people love this, right? And then they expand around it. And it's been very successful time and time again.
Absolutely. That's basically our approach as well.
And why? So you've seen a lot of different product companies, Sean. Why do you think that's the case?
Why do I think that's the case? Because of the advent of technology and the internet. So back in the day, right, you used to have more difficulty reaching customers. And so when, as a product business, you needed to be able to sell a lot of stuff, right? Anytime you opened an account, it's like, how much can I get this person to buy from me, right? And it was really important to have like a catalog of products, right? So that you could drive as many sales, because it was tough to get sales and there wasn't e-commerce and Amazon wasn't around and blah, 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 right? Now, and so it made a lot of sense to have a catalog that you could sell so you could have a bigger ticket size when you're going through wholesale. Now with e-commerce, what you're seeing is it's like, hey, I've got this like, I don't know, some weird niche product, like I've got a menthol shampoo that is specifically branded for men. Okay. And it's like, I'm going to just sell the crap out of this menthol shampoo. And it's like, you know, if you sell a $20 thing of shampoo to 10,000 people, that's a good business. You know, that's a good start to a good business if you've got the margins on it. But that business model wasn't really like possible, right? So there's this latent wisdom in the market of like, you need to have many SKUs that I don't think has caught up to the technology, where now a product entrepreneur can find, you know, one customer in every zip code, and that's a great business. And that was never possible before the internet, right? And I don't think that the world has caught up to that yet.
Mm-hmm. Yeah, that makes a lot of sense. How do you companies who offer customized product plans for keep up pace on inventory? That came in through just now from the audience.
Interesting. How do companies who offer? I don't know what customized products. Oh, I guess like custom products. So it's like the way you would keep pace on inventory there is you would want to make sure you have the underlying things, right? So we have like, for instance, I'm thinking like a blank t-shirt question kind of thing, right? So it's like what you want to do is you want to have the blanks and you want to have the ink, right? Even if what you're actually selling are custom t-shirts. And that's the way that you would be able to keep up on inventory, is you'd fund the underlying like raw materials that then goes into the final customized product.
And does Kickfurther do that a lot? Fund raw material purchases for you know, final assemblers or, you know, custom businesses like that?
I would say it's like, we don't do it a ton, but there's enough of the market that does it, so we support it. So it's like, it's a little bit more of a complicated process. It's not as easy as like, hey, this is my factory and I buy it for $1, right? That's like nice and easy for us. It's clean. When it's like, hey, I've got these 10 suppliers and, you know, it takes me like 5 hours to make this thing. It's like, that's a messier process, but we get through it because we want to support entrepreneurs. Yeah, so that's the best answer. We don't do a lot of it, but we do support it. And what we've seen, actually, interestingly, Kevin, is as we're moving up market, it's becoming more in demand. And it almost feels like, from our perspective, we always look at like, what's the liquidation, you know, if we have to take this inventory back and deal with it, since it's all on consignment. And it almost feels like those commodities might be easier to liquidate, right? Like blank white t-shirts might be easier than some like, IoT custom product that the app doesn't work for it anymore. You know what I mean? So we're seeing that it's actually got some attributes that make it not unattractive for us and for our community.
That's interesting, because I would have thought when you first mentioned that it would be the opposite. They'd be harder to liquidate, but it makes sense now that you mention it, because it could be used for so many other products and use cases, right?
Yeah. It's like if you just fund like screws, they're like fungible, right? A screw is a screw is a screw is a screw by and large, right? And so it's like, yeah, you can like liquidate those at a decent price, maybe a 10 or 20% discount, because it's like the same product that anybody else is selling, whereas a custom product, you're going to take like a 90% haircut, if you have to take that through liquidation.
That's super interesting. So the next question, would love to know what time frames it makes sense to start reaching out to. Oh, I already answered that. Sorry about that. Let me mark it as answered. Have you done extensive price testing with your hero products? What type of price sensitivity have you seen? And has that sensitivity changed in the past 2 months? That's a fantastic question.
Mark, for Mark, right?
Yeah, Mark, I'll let you take that
one. So we actually did increase our pricing over the last few months, and we haven't seen it really affect our sales too much, which is great. We did keep under the $100 mark for our product, which we thought was critical, but we were able to raise it 12% and to help offset the increased costs of raw materials, ocean freight, domestic shipping. Good old cost of acquisitions have gone up a little bit with the games that Facebook and Apple are playing together. It's been challenging. So luckily, I think the common person realizes these restraints right now and are willing to spend a little bit more.
Yeah, I feel like all of our clients, to a certain extent, have increased their prices in the last year or two, right? And that's why the index for inflation has increased across the board. I think every single company is doing that due to ocean freights and the cost of advertising going up. Next question. Actually, before I move into the next question here, I just want to let everyone know that I'm going to post the full schedule here in the chats. We do have a couple other incredible sessions later on today. So the one right after this in about 20 minutes here is two of our other clients. One of them is Melissa Moran from Swingly. And then another one is Nicole Bevis from Bevis Gear. We launched $1 million campaign for their backpack last year. And then a couple other really, really incredible sessions later on as well. So definitely check out that link below. So moving back to our next question. So Chase, who is our lead campaign strategist, I guess someone in the audience must have watched a session from earlier, mentioned using UTM parameters to work around iOS 14. Are you guys using that approach and driving traffic to your sites? Any strategies around traffic that you can find working great for your sites, Mark?
That's a tough question. We have tried multiple angles to get around the iOS issue. Some just seem to work a little bit, but they keep kind of closing those loopholes, which is really unfortunate. I wish everybody could just get along and, build together, but unfortunately, that's not the way the world works. So it's a challenging. We're actually switching some of ours from Facebook and Instagram, which was our main source of marketing as well as customers, to more Google, TikTok, influencers, YouTube. We're really rounding out our approach to try to offset the increase in cost is how it kind of really came down to playing that out.
Mm. And I actually have a personal question for you, Mark.
Okay.
With the supply chain issues and freight delays, et cetera, how do you plan for inventory? Do you just buy as much as you can afford? Like, how does that work nowadays?
I pretty much buy as much as I can afford. But
Yeah,
that's because we kept selling out. I was only in stock 5 months of last year and had 100% growth.
right.
So I'm leaving a lot of opportunity on the table, and that's frustrating as a CEO. I don't want to bite off too much and drown my business at the same time. So it's a fine line. I would like about 150 to 200% growth each year for the next few years, and then slow down to probably 100%, 75%, just to maintain the quality control, the customer service that we would like to provide. We really want our customers to be happy. And if they have any issues, we want to take care of them right away. And as you know, I've already sold over 27,000 units. I'll be 30,000 by the end of the month, probably.
Yep.
When you have that many customers, especially during the busy season, the holiday season, I mean, I was selling 800 to 1,000 a day of my product and trying to keep up with all the questions and customer service. And, oh, I inputted the wrong address. There's just all different issues that you're going to run into. And just take one step at a time is my recommendation. Get excited, but don't go crazy and basically drown your company, because it can happen. I've seen it happen to some friends of mine.
Gotcha. What have you seen, Sean, across your, all the different partners and businesses that you work with?
Yeah, we've seen disruptions, definitely. And I think people are probably, it's like, honestly, I feel like this question is so custom for every entrepreneur. And like, every entrepreneur kind of has their own risk tolerance and what they're comfortable with, right? And at the end of the day, you're trading one risk for another, right? It's the risk of stocking out and running out of stock and then missing out on sales and those customers going to your competitors, right? Or it's the risk of having too much inventory and then not having, not getting the distribution and incurring those overhead costs and then, having to go through that. And which of those risks is more painful for a product business? I mean, I'm selling inventory funding, so I'm going to say the first one, that it's worse to miss out on sales and have those customers go to your competitors. But like I said, it's really is a question that each entrepreneur needs to answer for themselves, to understand what their own risk tolerance is, understand their customers and their market. And at the end of the day, like, we're all trying to peer into a crystal ball and predict the future, and it's never going to be perfectly clear. So we do our best and, figure it out, figure it out after whatever happens.
Well, one more item to add to that. So my last PO was basically 6 40-foot containers worth of product. So I put in my PO for that so I can secure the raw materials. And then I had my manufacturer send a container out every 3 weeks. So I kind of met in the middle. So I have my raw materials and I'm not scrambling to get, and paid for those up front. And then have my containers come every 3 to 4 weeks is my goal. It's another container land, another container land, another container land as I sell my goods. So I can kind of limit my storage fees in logistics.
And I think that goods. So for anybody that wasn't here at the beginning of the call, I really think that speaks to one of the first things, which is that strength of that supplier relationship, right? Being able to have the conversation with your supplier and say, hey, this is what I need, right? I need a container to come in every 4 weeks. How do I get that? Right. And they'll say, oh, if you can help us out and, like give us more raw materials, or I don't know how that conversation went, Mark, but I bet it was something pretty close to that, right? Like,
it was, because I didn't want to have the lead time to get the raw materials of 3 to 4 weeks. So I wanted those, and I was willing to pay my manufacturer to store those raw materials to protect my supply chain issues. The whole key is to leveling out and try not to, you want to sell as much as you can, but not sell out. It's a fine line. And especially with the algorithms, the way a lot of marketing works, if you don't continue to kind of sell at the same level or close to it, and you have to drastically reduce, your sales, like I had to do last July actually. And I went from selling 150 units to 200 units a day down to where I could only sell 15 to 20 to keep in stock. And that really, there was a ramp up when I got my inventory back in for the algorithms to take place and to recorrect themselves to our new demand. So it's a learning curve, definitely a learning curve. So that's what I found.
So what you're saying is that because like when you stock out and you've reduced your distribution, then like the algorithm isn't placing your listing as high. So then it's like it impacts future distribution.
Exactly.
Yeah, that's such
and you're not
pain.
Oh, it is. You're not spending as much on advertising, so they don't treat you as well either. You're not winning those bids. It's basically a bid war for Facebook, Instagram, and I've learned all this. I didn't know this going into my business and how competitive advertising, e-commerce advertising is. It's interesting. So the more you spend, usually you'll see better results, but it's nerve-wracking. Am I gonna spend $2,000 to $5,000 a day on advertising? Well, what are you know, you have to have pretty good returns to be able to support that. But once you get above a certain threshold, it just seems to really start gaining momentum.
Like a snowball.
A snowball. And I mean, on the flip side, of course, you know, if I'm Facebook or Instagram, you know, Instagram, same company, Meta, I should say, they want the customers that spend more. So you have to look at it from their side. Okay, if I spend over $1,000 a day, I'm in a different category than the smaller guys. So you almost have to take this leap, try it out, see if it works. It worked for our company. It might not work for every company. And my product, fortunately, we have a massive market. Like pretty much every household could use one of these. Not every household wants one, unfortunately, but every household could use one. So I have a big pool of people to go to. And that's really, I would say, keep that in the back of your mind. Niche market is great, but you better have really good profit margin. Otherwise, you're just going to get hammered alive, unfortunately. So we're in the middle. We have pretty good profit margin, but we also do a lot of volume.
Gotcha. Thanks for that, Mark. So I'm just gonna moving into the last 10 minutes of Q&A. I do want to let everyone know that I'm going to post a survey link in the chat here. Give us your feedback, and if you give us your feedback for at least 3 sessions and fill out the surveys, you'll be entered to win a free Amazon gift card during the Q&A and giveaway session at 4 p.m. Pacific time today. It's really a way for us to make these sessions even better every single time for everyone. So definitely take a minute to fill these out for us, and you can get a gift card. Let me post the link to the survey here for you all. And then one other item that I wanted to note as well before moving the last 10 minutes of Q&A is, so there are a couple recurring talks happening today, or not recurring, talks happening in parallel. So if you want the recordings to them and you want access to tomorrow, our VIP day, which are less like sessions like this, but more discussions with a lot of the leadership team and people doing a lot of the day-to-day work at LaunchBoom, and our partners as well. Like I'm hosting a session tomorrow with Stacy Bradford, who used to be the hardware manager at Indiegogo, and now he is the sort of head of new business. And so we'll have a discussion session there tomorrow morning. So if you don't want to miss out, use this link to sign up to get your VIP. It's typically $297 after the summit. And if you sign up before the end of the summit, it's only $197. So I'm gonna post that here as well. Okay, moving on to the last couple questions here. So how do you handle customer returns, Mark?
That's a challenge. Once I got large enough, I went through to a 3PL fulfillment center, and they handle my returns, fortunately. And then how do you process your returns, and what are you going to do with that material? That's always a good scenario to resolve, because you don't want to pay warehousing fees on returns. So
Yeah.
you know, that's where our fulfillment center has helped with some partners that have taken some of our materials and use them for nonprofits, etc. More of a donation than anything. But fortunately, after leveling out a little bit, we don't have a crazy amount of returns. So we're hopefully, knock on wood, that'll stay that way.
Cool. Thank you for that. And how should Tom Ruddy asks, how should we calculate the cost associated with these logistical services when we're doing our pro forma projections?
I would probably start at a 3x for your advertising spend and work backwards. Cost of goods sold, landing, put a 10% basically slush fund, because things pop up. They do, unfortunately. Figure out what your customs costs are going to be, tariffs, etc., and your domestic shipping costs, and just try to figure out all those costs before taking the leap. That'd be my recommendation.
That makes sense. And I think there was a question for you, Sean, that you typed in the answer for. You want to share the question and answer for everyone else that wasn't in the Q&A reading your answer?
So the question was, does Kick Further work with brands of any size? And the answer is I probably should have said it. Sorry, got ahead of myself. So we have $150,000 trailing 12 months revenue minimum for product businesses, but that can include successful rewards crowdfunding campaigns. So you do a big launch boom, you do over 150K, and we're good to go to fund the inventory.
Yep, that's awesome. And then another question for you, Mark. Have you ever used influencers? If so, did you see an uptick in sales?
Yes, we started using influencers about 3 months ago. And yes, I do see an uptick in sales when they post on TikTok or Instagram.
Mm-hmm.
We are definitely going to increase money spent for influencers and our relationships. And then we're also doing revenue sharing with some of our influencers. So we give them a link, everything can track, and we give them a kickback. And that's been very successful as well.
Awesome. What software do you use to track your influencers and affiliate sales?
It's called, I'm blanking on the name.
All good. If
I apologize. It'll come to me in a second. I apologize. There's so many companies that I work with that help out just with our company.
Yeah, for sure.
It'll come to me. Sorry. I'm getting a little over COVID as well, so my foggy brain is not quite back to normal yet.
Oh no. Hope you recover real soon, man. It's not fun. Actually, our whole team got it at CES this year.
Oh,
It was not fun at all. Do you offer free shipping or do you ask the buyers to pay for shipping, Mark?
I have structured my cost to include shipping. Free shipping, that was actually recommended by ScaleBoom. It's the mindset that Amazon put in everybody's head, free shipping, Prime. It's, if you don't have 2-day shipping at, or 1 day, it's a tough battle.
Yeah. That's true. That's true. Are you seeing that shift a little bit, Sean, with companies that you work with? Or do you have visibility into that at all?
In terms of
Cost-
the like shipping costs?
Yeah, charging customers for shipping.
No, I think the wisdom is if it costs you $5 to ship, increase the price by 5 and offer free shipping,
Yeah.
or like free shipping after you get to $50. But no, I think it's like, I would say dangerous to try to charge customers for shipping today.
Right.
Yeah.
Makes sense. Would you, so would love to hear your thoughts on working with manufacturers, debating making in America versus China versus Colombia. What should we look for when selecting a manufacturing partner? And do you have suggestions for finding the right partner?
Mark, you want to
You
go
answer
ahead?
that. You can go ahead and answer that. Real quick, I do remember the company name for the influencers. It's called Refersion, Refersion.
Yeah,
And
nice.
it's a great platform that's really been helping our influencers and revenue sharing. Sorry, my brain is foggy.
Cool. Reversion. I like that.
Yeah, Refersion.
Yeah, so for finding manufacturers, I would say get multiple quotes, right? So we always recommend a minimum of 3 quotes. If there's a brand that you like really like, you can potentially reach out to them and ask them who their manufacturer is. I've actually seen a couple of brands do that, and then they leverage essentially a network, and a referral is great.
Mhm.
And it's like, I would look at, we do a business registration, right? So we look for the manufacturer, we look how long they've been in business. Those things matter, right? There's like new people come up, they say like, oh, we'll give you your stuff, you send them the money, and you never hear from them again, right? So there are scams out there. You got to be careful. Ask whether they're a trading house, right? So a good way of like testing whether they're a trading house or you're working directly with the manufacturer is how many SKUs they offer, right? Like a factory will almost always they'll have like a very specific lot, it's like, we do plastic injection molding. Trading houses will say like, oh, we can do metal, and we can do plastic, and we can do rubber, and we can do anything, right? Like textiles, whatever you want. That's right. If you hear somebody say something like that, that's not a factory. That's a person representing a book of factories, and they're going to add a 10, 15, 20% margin onto it. My background is in supply chain out of China. I think with whatever else happens, I hope I don't eat these words, but I don't see that China will shut down the supply chain and the relations with the US, right? So I think China is like a relatively safe bet. They are getting more expensive. And I think that there are some stability and geopolitical concerns when you're selecting your manufacturer, right? So picking a manufacturer in a place that's stable, with all the world news and stuff going on right now, I think actually could end up being relevant in terms of preventing disruptions to your business. So, that's what I would say. Obviously, I've got a bit of a bias. Almost all of my experience is working with suppliers in China.
Mark?
Talk to a lot of people. Start domestically, maybe. See if you can make it work. Most of the time you can, unfortunately. But after multiple discussions, I got a referral from a manufacturer in actually California that recommended somebody in China. I met with the person in the US while he was over here for a business trip, so I could get a personal relationship and actually do a handshake, which is, I'm a little old fashioned, so it's important to me. I don't want to have a scam. I was nervous of that, having
Right.
an empty container show up or whatever happens. So it was really at the forefront, just talking to numerous people and really getting a good feeling, and talking to multiple manufacturers and a comfort level, as well as pricing. But you don't always want to go with the lowest price. I just want to make sure that everybody hears that it's attractive. You want that margin, but it could be a stumbling block for you with quality products, especially with dealing with China and Vietnam and some of these other countries. You have to be very careful. We did have a little bit of an issue, but it was more of a design issue than a manufacturing issue, which was resolved and rectified right away. And it's constant communication. Hopefully you have one point person and not kind of getting pushed around the company. And that's where my comfort came through, where I can call that one contact and then they'll get back to me on any issues I have.
Gotcha.
Yeah. And I just want to jump in here briefly. So I also shared a couple of links in the chat. So I forgot this, but we put together this content to deal with this specific issue. We highly, highly recommend that when you're talking to manufacturers that you negotiate using what we call a product specification sheet. So it's like one of these things that we've seen in, it's like, yeah, it's one of these things we've seen where you get quotes and something looks cheaper, but what you don't know is that they're using a lighter weight cotton or something else, right? In terms of the actual good you're going to get will be lower quality. And if you don't specifically and very tightly define what you're looking to buy, then it's almost impossible to compare quotes because there's just varying quality, right? So getting the inspection spec sheet and getting the product spec sheet and having everybody bid on the exact same manufacturing is really important when you're looking for manufacturers.
Fully agree with you. So we do RFQs and we send out the same RFQ, request for quote, with specifications exactly what we want, because we ran into an issue at the beginning when we were doing the design phase that we weren't quite getting what we wanted. And you need to make that extremely clear, and you want apples to apples, as Sean mentioned.
Yeah. Well, we just got a thank you from Miguel Ponce. He says, I hope everyone has a great day, great information shared, and thank you. So I just want to wrap this up and thank you so much, Mark and Sean, for joining me on this session here today. There are lots of great sessions happening today, so definitely check out the other sessions, see which one speaks to you. And if you have any additional questions, don't hesitate to reach out to myself, or you can, my email is kevin@launchboom.com. And then you can also ask any questions to our Facebook group, the crowdfunded community, just like the crowdfunded summit, it's the crowdfunded community on Facebook. And you can subscribe to the LaunchBoom newsletter on launchboom.com. So, and we share the Tidy Board case study on there pretty recently. So definitely check that out. It's a fantastic resource. And also check out Sean's link in the chat as well.
Yeah, I just reshared it to everyone. I had it only hosted panelists before, so now everyone should have it.
Yeah, awesome. Thank you for that, Sean. Thank you all for joining us here today, and have a great rest of your day.
Great.
Thanks, everyone. Have a great day. Thanks, Kevin.
Have a great day. Thanks, Kevin. Thanks, Sean.